time affluence is probably the greatest wealth of all, because it allows us to A, sit with ourselves, but B, pursue the things that we're passionate about. And I think that is what the advisors we all work with are providing for their clients.
This podcast is for advisor use only and not to be distributed to the public. The Wealth Consulting Group is an SEC registered investment advisor, and the opinions voiced and contents in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that strategies promoted will be successful.
Welcome to the Bull of Wall Street. I am excited today. I've got a special co-host with me, our president, Andy Kalbaugh, and he's going to introduce our special guest today because they're really good friends and former colleagues. But for those of you that are not as familiar with Andy used to be the divisional president of LPL for many years. That's where I met Andy, and he's now the president of the Wealth Consulting Group. And we're not going to be talking about markets today. We're going to be talking about other subjects that are very relevant for financial advisors, as this is what the podcast is intended to do. So with that, I'm going to let Andy introduce our guest.
Cool. Thanks, Jimmy. And thank you for the opportunity to play co-host for the week podcast. And I'm very excited to have the ability to introduce Matt. Matt and I go way back. I'm going to do two things. I'm going to give a little bit of a formal description, of his title. Then I'll give you the more embellished version of me working with this gentleman for almost 2 decades, I guess. So formally, Matt is the Chief Client Officer at LPL. He leads all of the client relationship teams, succession and advisor M&A, advisor and institution affiliation, client conferences, clubs, marketing, communications, and growth consulting. So for those of you who don't have a org chart in front of you, let me just translate to say that's a massive job at LPL and a very talented executive. Matt's been at LPL for 23 years. He's the group managing director, sits on the management committee. The management committee are the men and women who lead the company. So a clear driver of the trajectory and direction of the organization. I believe, Matt, you can correct me. I'll describe it as your first role at LPL was what we used to call back in the day the regional advisory consultant, which I think was somewhat accidental, but he was a legion of one. But to give you a better picture of kind of how talented this gentleman is, he basically built, created, and sold the RIA platform for LPL as a custodian as a team of one, right? In a day where no one was really quite clear on what the RIA was and why is this broker-dealer creating a custodial relationship, Matt was talented enough to help build the architecture and the infrastructure, sell it to our existing advisor base as well as any new potential RIAs, and just a really, really gifted executive. We worked together, like I said, for almost 15 years. And I can tell you strategically, thoughtfully, he knows advisors, how to run a business. He's just a gifted executive. And then as a person, he's probably even better as a human. And I'm delighted to see how his career has grown. I'm not surprised one bit. But I am very excited to introduce Matt officially and welcome you to the podcast today. So Matt, thanks for joining us.
Well, thanks, Andy, and thanks, Jimmy. And I did record that opening, and I will now be playing that at the beginning of every meeting I host for the remainder of my career, because that's a wonderful way to start things off. I'm not even sure I recognize that guy, but he sounds pretty cool.
I do. I miss that guy. And quite honestly, being on a team with guys like you was really what kind of got me back into the business and out of retirement, because I missed that. I missed that interaction. I missed that kind of collaboration and locking arms and making progress. So we're delighted to have you. So it's really cool. And again, thanks for joining us.
Yeah, thrilled to be here. You guys are doing incredible work with an unbelievable group of advisors. And I know we're going to get into it in the conversation today, but these layers of value are so critical as we move forward, as this world gets harder, it gets more complex. But the need for advice is greater than it's ever been.
Yeah, agree. Since I got the mic, I want to start the conversation. I think, Matt, you came up with a phrase I've used many, many times. Give me credit for it most. I may have forgotten once or twice, but I'm giving you credit for it most. You came up with a phrase, I actually think we were preparing for a conference. And you came up with a phrase for advisors to think about. You said automate, eliminate, or outsource. May not have been that exact order. But really what you were stressing was the advisors focusing on what's most impactful to their clients and most impactful to their business. When you came up with that, I'm guessing that was 7, 8, 9 years ago. It was really forward thinking. Today, it just feels really smart. So play us back, maybe what you were thinking back then, how it applies to today, and how you see that going forward as advisors think about managing their business into the future.
Yeah, no, look, it's funny. You had reminded me of that, and I still use it in concept every day. In fact, I'd say in this conversation, love to get your feedback. I've actually incorporated, or I've added a fourth variable to that. So it's automate, eliminate, outsource, and incorporate. Because I also think as you're doing those three things, and we talk about this a lot, is it enough to run a more efficient business? It isn't enough to kind of double down on your genius. I know that's an expression you guys like to talk about. I also think as you're gaining productivity in your office, because that's what we're seeing, this is going to be a new era of productivity, which we haven't seen for a while. You're going to have to climb the value ladder. You can't just bank all of those gains. They will take you down if you do. And if you're looking to go another 5, 10, 15, 20 years, I think as you find those new ways to be more productive, to create more value, the question is what new layers of value do you add? Because your competitors are going to be finding those same levels of productivity, those same gains to their day, and many of them will climb the value ladder. And if you don't, I think there's a risk that you get left behind. But when I think about what it really means is, and you and I have had these conversations with advisors for decades, it is, what do you love to do and where do you have native genius, and where those two things merge. And then the question is, okay, the things that you love to do that you're really quite good at, first question is, are they valued? And what I find more often than not is the things that people love to do, the things that they do very well, are absolutely the value drivers in the relationship. But I think it's a question that we have to ask, because some parts of that value ladder are actually not as impactful as they once were. A great example would be portfolio management. It isn't necessarily the differentiator that it was 10, 15, 20 years ago. And so I think about, if we go down each one of those, outsource. There are absolutely things that an independent financial advisor must do every day to be successful that they do not enjoy doing, whether that be payroll or human resources or compliance or cybersecurity, which is probably the most critical thing that folks are going to have to dig into going forward in this era of AI. Those are things that should be outsourced to someone who is an expert in it, someone who has scale in it, someone who actually is passionate about those things. All day long, outsource those things. Automate. There are things that are just technologically available to us now that were not available to us. Think rebalancing, think CRM, think about client meetings, think about notes from a conversation. All of these things can be automated through tools. I know you guys are using a lot of them to help folks be more productive in their day. And then finally, eliminate. And I think this is where it gets a little more challenging, and I'd love to get your feedback on it because you guys talk to advisors all the time. Is an advisor may lay out, here's the 5 things I do every day, and my clients really see value in it. And I think there are going to be some arguments that some of those things are not nearly as valuable as they once were, or at least the trade of time and effort to them isn't driving a material return to the business or to their clients' relationship or outcomes. And so what are those things? Like I said, is it investment management? Is it being able to understand underlying securities and pick securities? I think we've seen that start to diminish in value quite a bit. But I was just talking to one of our research folks. We're about to enter an era of IPO madness once again. And I think a lot of folks are going to be wanting to get in on the OpenAIs, the Anthropics, SpaceX in a couple of weeks. And the question becomes, is that actually valuable? Should you be doing that work? And so I think we have to look at our businesses every single day. I think it starts with what we love. I think it goes next to what we're really good at. And then finally, is it valued? And shape your entire business around those 3 things.
Yeah, really good. You're smart.
Well, I want to pay some kudos to Matt too. I've in my 11, 12-year run working with LPL as a business partner, um, I've always viewed you, Matt, also, and that's why I want to work with Andy, because you two guys, to me, understand the financial advisor. And every time I've heard you talk in presentations, it's really resonated with me. And just hearing you talk about, your genius and where what advisors should focus on, what they're really good at, what they love to do, and ask themselves or questions around that subject to make sure that they're clear on it, right, inside of their own heads. And but you brought up something on our pre-call about this new world order of value and this time affluence. Can you expand upon that?
Yeah, I didn't come up with it. I listen to a lot of podcasts, and sometimes I get asked to be on them. But one of my favorites is called the Happiness Podcast, and there's a professor, Dr. Laurie Santos, and she's just brilliant. And she talks a lot about the fact that we as a society live in time poverty, and we are very, very short of time. We find ourselves pulled in every direction, and I'm sure anyone who's listening and the three hosts on this call all understand that challenge. And one of the greatest joys in life, we think about financial affluence or political affluence or social affluence, and those are actually tend to be more ephemeral in how they actually overall make us feel. But the studies show that time affluence is probably the greatest wealth of all, because it allows us to A, sit with ourselves, but B, pursue the things that we're passionate about. And I think that is what the advisors we all work with are providing for their clients, right? They not only give them peace of mind, they give them a version of time affluence because they solve some of the most critical challenges that American investors face every single day. And it isn't just the markets or interest rates or geopolitics. It is, do I have a plan that's solid? Is my family going to be okay? What if there's a medical stress? What if someone in my family is suddenly out of a job? What do we do? That is a great deal of stress. That takes up a great deal of time. And these are the wheels that roll into time poverty. And I actually think this is a really neat way to think about how we talk to our clients is, yes, I'm going to help you further your financial affluence. Hopefully I can help you with health affluence. And I think wellness is becoming a big part of the conversation as well. But incredibly important is, do you have the time to pursue the things you love, to be with the people you care about, and take on the challenges that you find most rewarding? And I think what we just talked about, eliminate, automate, outsource, you do those things, you create time. You create a time machine in some ways.
I mean, I think that's been why I think the WCG was created. So to talk our book a little bit, our value proposition from day one has always been about how do we take some of the heavy lifting away from financial advisors that they and their teams have to deal with daily, give them back time. And for most of our advisors, they are spending a lot of that time in growing their businesses, maybe faster than maybe other advisors, but certainly be able to have the freedom to make that choice, I think is really important. You also, brought up a little bit within this new world of AI, and I'm actually here in Utah, in Park City at an LPL conference for large enterprises, and I've learned a lot. I sent an email to Andy and our team a little bit earlier today about all the notes. LPL's got a lot of stuff going on. You guys are doing a lot in the areas of technology and product enhancements and just tools around the financial advisor, things that we can leverage. Yeah. What do you think the financial advisor is going to have to look like? How are we going to have to evolve the next 3 to 5 years to remain competitive with what's out there?
I think we're all going to have to evolve a lot. The new folks, I actually was telling a group of interns just a couple of weeks ago who were just here, I was saying, ladies and gentlemen, this is the greatest time to enter our space, but honestly, any space across industry that I can think of. Because the reality is none of us have been doing what's about to happen for the last 10 or 20 years. It doesn't matter how silver of a fox Andy is or about how wrinkly my face is. My experience means nothing on some of the stuff that's about to come. And so the folks who are getting in right now, who are learning the new ways of operating, are going to leave us in their wake if we don't keep up and catch up. And I think that's a really cool thing is no one's native to what's about to happen next. And so I think we're all going to have to dig in. We're going to all have to kind of learn how to use these tools, understand where they help us, understand where we need partnerships. And I think that's a critical part of what is going to be necessary. Is you're not going to become a professional prompter necessarily. You're not going to go create your own digital agents. The reality is you might. And I think we're going to all have to wrap our arms around this thing, not kind of bury our heads in the sand of the way that we used to do things and kind of live a Luddite lifestyle. We're going to have to open our arms. We're going to have to go into Claude and chat and you name it, and start learning how to function in this new world order. And the way I see it showing up at LPL and where it's going to go next, but it's pretty cool. We announced a few months back a partnership with Anthropic, and where we've immediately seen incredible strides is actually in our technology department, because they're using Claude Code to drive massive efficiencies and massive productivity gains in bringing our technology portfolio to life. Where you historically would see, and Andy and I both know this well, really ambitious plans that sometimes get delayed, because that happens with tech, where things are delayed a quarter or 2 quarters or sometimes longer because of the complexity in the coding. We're seeing projects and portfolios come out a quarter or 2 early, which means your portfolio now has more value because you can do more things with that time affluence which you just created. So we're seeing great kind of strides forward in how we code. I think part 2 is we're using these tools, what was kind of large language models driving generative AI, which is great. You can create that next stage of agentic where actually you can action that creation, is where we are now. And we're seeing agentification show up for our service providers, for operational people, so that in the next several months, when someone calls the service center, there will be an agent riding along with that service agent who can actually listen to the call, formulate the answer, and get it right in front of the agent so that they can get you the answer you need quickly, correctly, consistently, and you can move on to the things that matter most to you. And then later this year, we're going to bring those agents to life. I'm not going to give too much information there because we're going to launch it at Focus this year, but we're going to bring the agents straight to our advisors. And I think that's going to be a real game changer.
I had a question actually for both of you guys about scale. I mean, I've been an advisor for over 3 decades. I'm aging myself here. So I've been around, and it seems like I've been trying to chase the whole comprehensive wealth management service offering for nearly 25 of those 30 years. And just now, I think this industry and having business partners like LPL is allowing advisors like me and other advisors with us to be able to execute better and deliver that. And I was just listening to some of the things that LPL has just done in the last few years. But Andy, maybe I asked you this first. I know we talk about this a lot in our talks, but it seems to me that advisors need to figure out how to partner, with other business partners to be able to deliver, things that, that you really need to have scale and money to do. I was just actually listening to one of the biggest threats, I guess, right now would be cybersecurity. Greg Gates was talking about that a lot, and I love Greg. And just how advisors are being targeted now by the bad actors. It's no longer just the big firms like you guys at LPL. Yeah. Andy, what do you think about that in terms of what the advisor, what we need to do in terms of partnering and scale and all that?
Yeah, look, I think it's somewhat connected to what we've covered here a little bit, right, with the value of time. And when I think about scale feels like, to me, if I'm an advisor, it's leverage of what do I want to do that drives my business, helps my clients, and allows me to differentiate. So if I follow some of the stuff Matt talked about, outsource and eliminating all that stuff, right, that creates time. If that creates time, I then have more time to work on my business and help more clients. If I've got a partner, somebody who I can leverage and lean on, use us just as an example, right, and use that, whether that's for investment management models, financial planning, whatever those services are, that allow advisors to focus on their genius. And when I think about it, use Matt's example again, where you outsource and eliminate things, that to me feels like the advisor has realized the outcomes are really important. Where they're manufactured and created is less important. It's important I can deliver the returns I want from my clients. It's important that my statement looks good and my reports are clear and I can communicate with them. less important whether it's done in my office or down the street or across, across the country, but it's available on their phone, right? That to me feels like scale. I don't have to do everything locally. I don't have to use all of my capital and my cash flow to try to build it. I think a challenge many advisors face is how do you create partnerships with people that are kind of sustainable and can deliver the experience that you want? Because I do believe most advisors do a great job and they care deeply. So that partnership has to be thought through, has to be one you can depend on. And I think it's one that should hopefully be able to fuel your business and make a difference in your growth, right? Because I look back at this industry for the three of us, where we were 20 or 30 years ago compared to where we are today, and making it up. You look back when I was doing retail, which was a long time ago, you were selling, advisory was just a twinkle in a few smart people's eye. I was doing brokerage business where you could have sold an AIM fund, which was probably 8 3/4 commission and break points. And that was really a product sale. Now you're doing advisory business. You're probably at about a 1% fee paid quarterly, but yet your business has grown so massively. And you do that through productivity. You do that through focusing on things that make a difference. And I think the only way you get there, Jimmy, is really trying to align with people who can put, kind of oxygen into your practice and give you scale.
Yeah. And Andy, if I jump on top of that, I think it's a new era of scale too, because I think there was a time where folks thought they could kind of own the entire verticality or the vertical of scale, from infrastructure to endpoint. And I think what you're finding now is relationships kind of like the one that's happening on this conversation right now. You've got advisors who have built scale in their practices. That's not enough. So they work with companies like WCG because you can add another layer of scale to their business. And WCG partners and some of the advisor with another partner like LPL who brings scale from a different standpoint. And each of us has a unique set of skills. Each of us has a unique sets of expertise and focus areas. And you stack those three together. And I think, look, that isn't just happening in the financial service industry. Look, that is absolutely the template for success across these big AI companies, across even the hyperscalers. If you think about it, the one that I think is most resonant to me is what you see between companies like NVIDIA, ASML, and Taiwan Semiconductor. Those three are three of the biggest names in the world, by far. Market caps soaring into the trillions. And the reality is none of them exist without one another. NVIDIA, brilliant at design, but they don't actually do manufacturing. But guess who does? Taiwan Semiconductor, the very best manufacturers of chips on the planet. But guess what they can't do? They can't create the machines that build out the chips that they create in manufacturing. So they partner with ASML, where the Swedes have just figured it out. And they've got the most expert kind of level of capabilities that anyone could ever leverage. None of those three companies flies like they do today without one another. And I think you're going to move into this world order where scale matters, but scaled partnerships are necessary. Jimmy, I was thinking about cyber and cybersecurity. This is a great example. What we're doing at LPL right now is we recognize that it is not only the most exciting era in the history of our business and the history of technology and productivity, it is certainly the scariest. I actually got to interview Renata Friedlich, our chief security officer, yesterday, and we were going through this whole new era, and it is mind-blowing. It feels like you're in science fiction. To not get too nerdy, but Anthropic on April 7th dropped a new release, a new program called Mythos. And they were about to release it into the market, and stop me if I go too far, but I find it fascinating. They're about to release it into the market just a few months after doing Sonnet 4.6. And before they released it, they realized it was 90 times more powerful than the drop a handful of months ago. And as they started to look into systems, they realized that if they weren't careful, they would take down the entire global financial and capital sector, because it was finding autonomously vulnerabilities inside of systems, every web browser, every operating system, not a couple hundred, not a couple thousand, not 100,000, millions of vulnerabilities that no one on earth knew that they had. And so suddenly what was about to be a public drop becomes a new project, where Project Glasswing is what they call it, where they went to the 40 largest companies on earth and said, we need to give you this thing first. because you need to go see what it means to your insides. We need to see what it means to your ecosystems. And can you solve the holes, fix the patches before the bad guys get a hold of it? And it is mind-blowing. Today they're working through it. It could take them months, if not maybe even years, to get through all of it. That's the reality. The bad guys are getting armed so heavily. What once took 700 days, basically upon finding a hole and then exploiting the hole, on average took 700 days. Today takes less than 24 hours. The cybersecurity, the cyber wars, they are state-sponsored global terrorists, and they are after us. And a company like LPL, we have the bandwidth, we have the skills, and we have the responsibilities to support you guys and the advisors you serve. So that's an area where we're going to double down to make sure that you guys can focus on what matters most. Because I don't think any of the advisors that you guys practice or serve, or any of the advisors who I get to talk to, want to deal with cybersecurity.
No, that's incredible. And I can't imagine. So, independent practice or even a decent sized firm trying to do this on our own. So we're very happy to be partnered with you guys to help us with a lot of these things that are just way beyond what I think small business owners are used to handling, right? So, and then that being said, when I was talking about scale, I learned today also there's some neat things that I never would have thought would have been available to an independent advisor. So, for example, let me talk up LPL a little bit on things you're working on without letting the cat out of the bag. But some of the banking and lending solutions that wirehouse advisors have access to for years that you guys are coming out with, that also involve potentially sharing of economics with independent advisors. I find that fascinating that we're able to participate there. Also, some of the investment banking solutions that you guys have available where we as advisors can maybe refer to an investment banker, but, and a lot of advisors have built those relationships themselves if they're in the business owner market. But to be able to participate in the economics, those are just all things that, smaller firms just couldn't do by ourselves, right? So to me, scale also means those types of things to be able to be a even more valuable resource to the kind of clients that some advisors have. And that being said, one of the things also we discussed in the pre-call was about this new digital world that we're in today with AI disrupting a lot of industries and wealth management and what the potential could look like in the future. It seems like, and I want you to talk about this humanity part that you mentioned, becoming a premium again, which is what I think a lot of advisors have always focused on, but talk about that.
Yeah, I think, and I want to kind of turn this to you guys too, because this is the hardest thing is we're talking about scale. But what matters as much or more is personalization and human connection. And when you live in a world of scale, personalization is hard. In fact, one of the things that I try to push on folks is they'll say, hey, how do we, I like this expression, how do we make big feel small? And I'm like, don't make big feel small, make big feel personal, because big is important. Big matters. Don't hide from big, but how can you find personalization inside of big? And I actually think, Jimmy and Andy, that's part of why a partnership like ours is so critical, because we can go invest hundreds of millions of dollars in cybersecurity and make sure that everyone is safe from the bad guys who are trying to knock down the gate and get inside and take advantage. But it's harder for us to be personalized on the ground. And I think our partnership allows that in a way that is challenging for bigger firms who have the scale, who have the ability to give you the tools and resources that you just talked about, banking, lending, high net worth, investment banking, but making people feel like heard and seen. And I think you guys do a wonderful job with the advisors that you partner with inside of WCG to give them the best of both worlds.
Yeah, I think we're focused on that. I know as a part of our differentiators, and there are 6 priorities that Andy and is leading for us at WCG. The community piece that we offer to advisors is a big part of that. Yeah. So Andy, I was in a breakout with some other large enterprise executives and just listening to some of the things that firms are building out. One of the things we're trying to do, Matt, is build out some multi-family office services for advisors to use ourselves. But there's a lot that I've learned just coming to this conference on how we can leverage the resources that LPL's already built now with the financial planning and high network team. You guys, I think I heard today, have over 100 professionals in those areas already. Yeah. And I think a lot of that's been grown over the last couple of years. So Andy, I mean, to us, community is important. What do you think in terms of the human element that advisors bring to the equation? How do you see that looking in the next, 3 to 5 years and beyond with the client relationship?
Yeah, like I'm in, I think, the same camp as everybody on this video. I don't think the human piece goes away. I think scale, technology, AI empowers the advisor to be more productive and spend less time on my phrase of dirt digging activities and more time on the things that make a difference in people's lives, which is, I believe, why most advisors actually got into business in the first place. And you look at things like whether it's the notes you take from a client meeting, how you can transfer it into the financial plan and update your CRM and things like that. There's not as much. AI can give you the advantage of supercharging the administrative side of your work without having to put a burden on labor and the capital that many offices face. Second, then, is how do you use that to create up capacity so you can delight your clients? And I believe most advisors will win by a really clear, differentiated value proposition. You could have a couple questions. There could be different markets you serve, but you need to be able to be really clear and crisp on how you differentiate and how you make a difference. And I go to the camp where I think most of that is where you add real value and make a difference in somebody's portfolio, help them sleep better at night, solve complicated issues, help a kid with special needs and their family, and how do I give them funding, and what's my portfolio look like regardless of the tumultuous environment, right? That's real value. That stuff never gets digitized, but I think you can use the digital age to supercharge it and bring an experience that others may not be if they're either resisting or not taking advantage of it. So I view this as an opportunity to get even better at what we do. Some could view it as threatening. I view it as empowering and freeing of my time to do what I think I do uniquely well.
Andy, I couldn't agree more. I think if you look at what's going to be critical for folks to do going forward, and first I'll start with, I absolutely think the financial advisor is as important or more important than they've ever been before, because we do not lack information. We do not lack the ability to process zeros and ones really, really quickly. That's a fact. We know that's going on faster than we've ever seen it before, and we're just getting started. Like, if you want to get really geeked out, like, just around the corner is quantum computing. That's going to turn the whole thing upside down again. But what AI can't do today, what a computer couldn't do yesterday, what quantum computing won't be able to do tomorrow, is things like empathy, care, understanding, trust, communication. That's a really critical one. Communicating complex ideas, complex situations in a simple way, and bringing a level of expertise where it matters most. I was interviewing a gentleman the other day, and he was explaining to me, I thought he had a really way of kind of articulating. He said, "Hey, Matt, the next generation MBA is the MFA," and he was really trying to make a point that the artist inside of us is who's really going to be needed going forward. And I think about, someone was saying that, like, effectively doctors will no longer be necessary. And the reality is, and our profession in a similar place, is when someone's going to give me really hard news, or I've got to talk to someone about a really challenging situation, it's absolutely critical that I believe they are knowledgeable and expert and they're going to give me the right answer. And I think AI, outside of some hallucinations, can get you some really sophisticated right answers. But I also think when it comes to things like my family's health, or am I going to be able to retire on this amount and live this type of lifestyle, I want to know the person on the other line actually cares. And I think that's a hard thing to put a specific value to. But to me, care matters a lot. When I'm talking to Claude or talking to Rock, and they're telling me things and they're trying to agentify empathy, I see through it. I think it's clever. I think for a second it gives me a tingle, but then I'm like, wait a second, this is just a set of code that was programmed to make me feel good. Versus someone who I know. Look, Andy, we've talked to a long time. If I told you I was going through something hard, if I told you I was really concerned about something, when you sat across the table from me, I know that you would do just about anything you could to help me. Not because it benefited you, not because it was coded into you, actually probably was coded into you by your mom and dad. It actually genuinely is who you are, and you want me to be okay. And that, I just don't think any computer, any program, any code session is going to ever replicate that.
Man, I love that. I love this. I'm going to take that away from this podcast and start talking about that a lot, about caring, because you're right. Will a human being ever really believe that the AI really cares about them? which builds trust.
I think there's going to be a lot of psychological studies that people get convinced that the AI cares about them. I think they've even made a couple of movies about it, and it's really interesting to think about it. But at the end of the day, for those of us who are kind of living in reality and understanding what is real and what is an algorithm, we're going to turn to humans, because humans absolutely are what we were encoded to do and be with since the very beginning of time.
If I build on that a little bit, I think as an industry, we need to get a little better and a little more clear as to how we articulate it. We all need to be able to do a version of what Matt just said, right? We've got to be able to say, no, here's how I differentiate. Here's the role that I play. Here's why I and my team matters. I think historically, some people have been a little afraid to charge what they should be charging. I think they're afraid to talk about fees. The really, really successful advisors lay it all right in front of you, and they explain exactly what they do, why they're charged the way they're charging, and where they see great value. And I think the closer we can get to explaining the roles that digital environment and what portfolio construction can look like and why you use it and who does it and what role you play, I think you get much further around the track and allow yourself to distance yourself from the crowd. Instead of kind of getting in this game of, kind of confusing or ducking the conversation, talk about how it powers your business. Talk about how you utilize it to make a difference to our clients, and then how you use that time to help people and make a difference in their lives. And quite honestly, spend more time and energy doing that than the people down the street that they may perceive they compete with. And I don't think we're super good at that as an industry. I think the good ones are really good at it. But I think we as an industry could get better at it.
Look, I think that there's a real opportunity for folks, and this is where our partnerships help advisors truly understand the value that they bring and understand and articulate clearly that folks who work with them are so much better off for that work. And I think this is where I put a challenge out there. I do believe if you're still offering asset allocation and basic financial planning and, hey, I beat the market by this much, or we're outpacing inflation by this much, I think you are going to have to reconcile whether your fee is aligned with the level of value you bring. But when you're bringing, Jimmy, you talked about it, advanced estate work, high net worth capabilities and products, really bringing in the insurance side, the debt, asset, and liability side, when you're bringing in multifamily, when you're talking about the products, yes, but the services that are necessary for families, when you understand tax code really, really well, when you see what's coming around the corner as far as the types of market environments, yes, but more importantly, kind of the total picture and how it sets up against a person's plan, and you bring that plan to life. And you look, I've talked, you guys, Jimmy, you and I talked to a lot of the same advisors. Folks are thinking about new ways to add value. I love this wellness idea that, like, hey, it isn't just that you have financial wellness. Like Ann Tran and I have talked about this a bunch. Like, her dream office looks a little bit different. Her dream office has, I'm making it up, has a cardiac specialist in one room and a stretch lab in another room and a nutritionist in another room. And then you go into your financial planning, like, because we have to have not just lifespan, we have to have health span too. And I think that we are getting, as more and more of the kind of mundane parts of our work are automated or eliminated or outsourced, we get to double down on these things that make people's lives better. And there is no way to overestimate how valuable that is.
I love this discussion, and we all love Ann too, by the way. And I've had many discussions with her around this subject. She's also been a guest on this podcast and on yours. So when Matt, for those that are watching or listening, says that he's been interviewing some people outside of normal interviewing for his role, Matt has a very popular podcast with his colleague Taryn called If You Could. So very successful financial advisors have been on that podcast, other professionals as well. So for those of you that want to know what's going on with LPL and with successful financial advisors, please tune into that. But this, we've talked about it already a lot, but you two guys are in a unique spot where you've been in a leadership role to observe some of the best financial advisors in the business over many decades. Expand upon that a little bit in terms of what you guys see. Matt, start with you in terms of characteristics of what makes a great financial advisor. And if you think that's going to evolve, I actually believe the table stakes are going up, that we're going to have to do more work to protect our margins and be competitive. So what do you think, Matt?
Look, I think I was lucky enough. Andy mentioned I was the first regional advisory consultant at LPL, and my first territory, I used to love to joke and say, was Hawaii, Alaska, and the lower 48. It was a pretty big territory. And I would go visit, and I was very young, but I'd go visit offices across the country of the very best advisors at LPL and quite honestly, in the industry. The kind of stalwarts of the industry, names like Susan Kaplan and Bob Fergasso and just incredible folks. And every time I went in there, I would learn a couple things. One is they all do it a little different, which I think is so cool about this business. They all have this kind of slightly different way that they approach, the slightly different way that they run their office, slightly different way that they work with clients. But the old line that I used to love from Jim Rome, for if you guys remember him from sports broadcasting, he would always say when a caller would come in, have a take, don't suck. And I felt like that was what stood out, is each one of them had a very confident understanding and belief about what they did, how they did it, and who they did it for, and why they did it better than everybody else. And then underneath it, they always had, and this is what separates the good from the great, is they always had systematic processes underneath it. Consistent, repeatable, sustainable, delightful processes that when someone walked in, this is the experience they had when they walked in the door. When they went through the account opening process, this is how the account opening process worked. When they thought about creating moments of delight, they did them in very unique ways that were memorable. I remember one office they used to do, they'd have a big holiday party in July, and they would all dress up the whole office like Christmas. And then they would have a Santa, and they'd have every client come through and take a picture with Santa. And they called it their Christmas and July party. And then what they would do with those photos is they would send them out during the holiday season as cards to each one of their clients. What a cool Christmas card with them sitting on Santa's lap on their refrigerator, everyone saying, what is this? Like creating those moments of wow, but underneath it, this gets to a whole nother area of, like we talk about, unreasonable hospitality. It's something that Rich will talk a lot about. It's actually something we learned from Commonwealth and what Wayne Bloom and team have done over there. But it's creating these wow moments, but delivering them sustainably. And if I could, I'll bore you with, I think, a cool example of one. Unreasonable hospitality comes from the owner or general manager of a restaurant called 11 Madison Park, which was named the #1 restaurant in the world. And they would do, yes, brilliant food, but they kept finding new ways to delight their clients and then figured out how to scale them. And the example that they had is in New York City, folks would come in for these long 3-hour dinners, and halfway through the dinner, you'd see someone run out and go feed the meter because they had to make sure they didn't get a ticket. And so one day, one of the waiters says, hey, what are you doing? He's like, I'm going to go feed the meter. He's like, you know what? Give me your license plate number and tell me where your car's parked. I'll go take care of it for you. I don't want you to have a problem with your dinner. I want you to focus on enjoying this moment. That's a cool moment of delight, right? But that's a one-off. So what did they do? They went to the general manager. He told the general manager, said, okay, going forward, concierge, every single time someone comes in, the first question you ask them is, did you park your car? And if they say yes, you say, okay, great. Where did you park it? What kind of car is it? You sit down and have the best 3 hours of your life. The meter's taken care of. So they took a moment of delight, a bespoke moment, and they created scale around it so that every customer, whoever came through that door, got that exact same experience. So a differentiated set of values, a strong and firm belief that value actually was something people were willing to pay for, and then systems and processes underneath to make sure that was delivered the same way every time.
Wow, that's a lot. Andy, can you add anything to that?
I'll take it. No, I can't add anything better than he did, but I'll give you a perspective. If it's, what do I see as a consistent recurring theme for really elite advisor or good ones, however you phrase that, I would build on Matt's example where they know what they're good at. I always call that know how you want to differentiate. So you want to find where you really think you add value and what then that translates to your target market. Example I would give would be there's an advisor in Houston, didn't get her sign off on names, so we'll leave names out. She focused on helping credit unions build non-qualified deferred comp to executives. That was her niche, right? We've all done this a long time. You line a bunch of people, 1,000 advisors up in a room. I'm not sure I know 2 other people who can compete with that clear description. So that was a very clearly defined niche. Other thing, if you're an advisor and you've got a clearly defined target market, and you can have multiple ones, is then make sure that target market, that value prop is pulled through your entire organization. So your digital, your website, your content, where you want to be viewed as a thought leadership, how do you send things out in social and LinkedIn, right? You want to be viewed as that resource and reference. She really knows that market, or he's really good at blank. Really good advisors can clearly articulate the markets that they serve. And I don't mean elevator pitches. I mean, here's the market I serve and why. Right? You could pick, I focus on FedEx retirees, and I've got the FedEx, kind of stock option guidelines in my website. I do seminars every 60 days on retirees for FedEx and things like that. That's what real value looks like. It's so much easier to build your story and your content around that, and referrals come so much more freely because they clearly can say, you should talk to my advisor. He focuses on blank. So I would say that would be a common theme. The other one would be, because they are confident in where their value is and how they can help and make a difference in people's lives, they are not afraid to charge fair value for that service, right? And they are very clear on what they pay, or you get charged, and they're very clear on what you get from it, and it's all laid out in front of you. And I would say most really successful advisors do not struggle with that point. It's competitive, don't mishear that. But a clearly articulated value proposition that pulls through all of your content, your training, your websites, your staff is versed on it, and then you can afford to charge for it because you are very good at the point of sale. I think those are 2 common traits.
I think you nailed it, Andy. It's so cool. As you were saying that, I was thinking about some conversations I've had with some of the advisors that I think you were even describing. And when you're that good at what you do, when you're that confident in the value you deliver, the advisor isn't just being interviewed by the prospect. The advisor's interviewing the prospect as well. This is a 2-way street. And some of them will articulate it clearly. Look, I work with 120 families. This is what I do. This is how I do it. And this is why we do it. This is what we do. This is how we do it. And this is who we do it for. And I think you could be a good member of our team, or a good member of our organization. However, I got to understand what it means to you. And it is a 2-way street. And that is you're a high level of confidence. You've got a really solid business when it isn't just talking to Mark Friedman the other day. He said when they first got in the business, their primary or their only mitigating factor was whether people were mammals or not. If they were mammals, they took them. And you get to a point where you're running a really sophisticated business. You only have room for so many families, and they've got to be a good fit. Just as much as you want them, just as much as you want them to like you, you've got to make sure they're right for you too.
You guys reminded me of how Nick Murray used to talk about in his book. He had 200 spots in his arc for 200 families. And when that last spot's taken, that's it. And so this leads me into a subject that I think is one of the most important things that financial advisors are dealing with today. I remember first getting in this business, as a young person, we were taught about how this incredible wealth transfer can happen, for clients. It's finally here. There's a lot of wealth going to be transferring from one generation to the next in the next 10 years or more. But it's also now related to advisor succession planning, which I think is a big thing. And it was fascinating. Louis Diamond was here from Diamond Consulting, which is a leading, recruiting firm, placement firm for big teams that are moving from one place to another in our industry. And he was saying that he was just talking to some people recently, and because valuations are high for advisory businesses, that some advisors, because of AI, are just saying, look, I want to cash out. I don't know how this is going to affect our industry, valuations, et cetera, or I don't want to have to do all the work that's going to be needed to transform my practice into what it's always been, something that's more modern day and competitive. So advisor succession planning, can you guys talk about that, Matt, a little bit? And you know, I know LPL has done a lot. I mean, from a broker dealer custodian perspective, you guys have done a lot in terms of leading the way in your space, I think, when it comes to that. But, you know, how do you view that advisor succession planning and what we need to be thinking about as advisors?
Yeah, this is a really topical and important question, and a conversation that if you spark at any conference, you know you're going to have takers who want to talk about it. And I think it's going a lot of different directions. And in fact, you mentioned our podcast. Our most recent episode is with Mark Friedman, who 36 years at LPL. He actually sold his business to LPL 4 years ago. And the funny thing is he's going stronger than ever. And so what we learned in having conversations with folks is a couple of things. One is everyone's got a slightly different need. There are absolutely some folks who are like, I'm done, calling it quits. Let's move on to the next generation. I'm ready to be done. I actually think that is the exception rather than the rule. More and more what I'm hearing from advisors is I want to slow down, but I don't want to get out. I want to focus on the things that I love, and I don't want to run the back office any longer. I want to take a little bit of money off the table of my largest asset and reduce some risk. But I still want to work with people. I still want to have an impact. I still want to feel like I'm making a difference. And so maybe I had 200 people on my arc, but maybe I just want a rowboat with 20 people on it going forward. And they're the people who happen over the last 20 or 30 years are my very best friends. And so every time we talk to an advisor, we first need to understand their story. And then we need to see if we currently have a set of solutions that will work for them, or do we need to iterate a new set of solutions that will help people solve for that next stage in their journey. But it's funny, we've talked about the aging advisor demographic, which absolutely is true. But what doesn't seem to be coming along with it is the disappearance of those aging advisors. I talked to folks who are in their 60s, 70s, 80s. I had a fourth generation 94-year-old advisor I was talking to the other day. He comes into the office for like 4 hours a day, twice a week, puts his pen on a paper, talks to a handful of folks, walks the dog around the office, and then his wife picks him up and takes him home and takes a nap. Like, I actually think this business is so beautiful because it allows every shape of business over every period of your life. As long as you find joy in it, as long as you're delivering value, there's a space for you. And I think succession planning is absolutely not one size fits all. And it absolutely does not mean that the book closes. It just means you move to the next chapter. And you get to write, you get to take this blank page and determine what it should say.
Guys, can you chat about what you think this means for the next generation of financial advisors? I think there's such an incredible opportunity for our industry to just become much more popular to people that would normally have been doing something else. And so, like you just said, I think I've always been biased, right? I think the financial advisor career is such a rewarding, career to pursue. We can earn a good living, but do a lot of good, right? And provide a lot of, value to the world and people. Can you talk about how you think that's going to evolve, you guys, and for this, younger people that want to get in, an opportunity for them?
Andy, go ahead.
Yeah.
I'll follow up.
I'd say it's an opportunity. Our industry, and you could define the industry as your kind of traditional wirehouses or insurance companies who used to be the usual proving ground or training ground, those have, really slowed to dried up. So new entrance has been slow, which is also kind of why you see succession being so interesting, because there's just not as many in the space as much. But I do think, Jimmy, that structure, and use Matt's answer on the last one, which was perfect. If I'm the one looking for that next phase, I've got to bring people in who can take care of my clients and manage the book and do well in my business, while I can spend more time doing what I want to do, even if it's enjoy it and relax a little more. And there is a really cool way to get brought into this industry, trained, nurtured, and given for lack of a better term, a book or the client base that they can make a difference and learn and grow and evolve into, where it's not what it used to be when I started, which was, where's your desk? Where's your phone call? and here's your call list, go see if somebody will actually pick up the phone, right? It's just very, very different. And I think for people who are looking to have a good living, a good life, kind of let's call it a good career and make a difference, that's kind of rare these days, that you can actually do well by doing well. And I think our industry gives that. I think it's a great profession. And I do think this kind of longer life cycle, creating capacity and technology gives you a path that people can bring new entrants in, right? And you hear a lot of really good advisors say, I met Andy because he was actually making this up, manager of this boutique I run or I shop in. And he's such a good people person. I thought I could bring him in to take over my B or C clients, and I'll teach him, and we'll do lots of joint work together for years. Next thing you know, you wake up and and I'm a real advisor someday, and I don't have the pressure. So I think the prospects are good. You got to pick the right environment. You got to pick somebody who's got the time, willingness, and ability to bring people along. But if so, I think both the economics and the structure allow it quite nicely.
Andy, I agree. Like, I think this is such a cool thing. What we've been talking about this entire podcast is empathy, humanity, communications, personalization, the ability to connect with other humans in care. You can bring folks from a lot of different walks of life who meet that criteria. And I think it used to be a little bit more of an intimidating industry because it was NAVs and interest rates and, PEG ratios. And now yes, those still exist, but those live in that world of automate, eliminate, outsource more than they used to. And you can bring in people who can connect and care with humans and then train them up. And I think it's a wonder. Whenever I meet an advisor who's in their 30s or early 40s, I'm like, oh man, you are stoked. Like, the world is your oyster. There is a lot of value that you can provide, and a lot of people who are going to need it, and a lot of advisors who are getting a little long in the tooth, and they're going to want to slow down or settle out. And I think what an opportunity. I will say, for those who are listening and they're thinking about G2, I spend a lot of times with Generation 2 inside of these G1, G2 offices. I think there's this is generalization. There's incredible power that the next generation brings. They're more sophisticated. They're operators. They know how to run a business. They're tech savvy. They're digital natives. They don't get intimidated by this next turn. And that's a wonderful thing to have in your practice. However, on the flip side, what I see is many of them didn't do what Andy's just said. They don't have to do 250 dials a day. They don't have to go knocking on doors. They didn't learn how to be rainmakers necessarily. And I think that's what we're going to have to understand and solve for in this generational transfer is really sophisticated players, really great humans who have the characteristics to thrive in this next world order, but who haven't necessarily built a business, who don't necessarily have that rainmaker mentality. And we're going to have to teach them up in those skill sets. And once we do, there is no stopping those folks because they've got the business acumen that none of us old sales guys had back in the day.
Yeah. Do you think, Matt, that firms are going to drive that business development capability more going? That's what I think is going to happen, whether it's the big firms like you guys that have clients, investors yourselves, or the aggregators or the intermediaries out there, just because, like you said, back in the old days, not too long ago, the people that survived were the people that can do business development well. Of course, they had the technical ability to become a CFP and do that work, but really the survivors are the ones that could, do sales, right? And are good entrepreneurs. I just think that now so many more people that have the ability to become a CFP can have great jobs. Not necessarily that they're going to be good entrepreneurs, and maybe that business development part is going to be taken over by more of the companies they work with. What do you think?
Yeah, I think all of those things are true. I think it's incumbent upon the advisors who are listening that you're building your labor force around that eventual transfer, and are you bringing in the right people? And importantly, are you actually training them up? Because if you're just having someone pushing paper all day long or making trades all day long, and you're not taking the time, hey, a couple hours a week, I want you to trail me. I want you to shadow me. I want you to sit in some of these conference calls and listen in. I think we have to have the same thing here. Like, this is absolutely a time where development of our next generation is so critical. And in fact, you're reading a lot of stories right now as companies are digitizing and agentifying that first line of work, that first career professional out. One of the real drags that we might see in our economy going forward is that first line of hiring is the person who becomes your manager, who becomes your vice president, who becomes the leader of the company. And if you eliminated the front line, where do we get the next generation of talent? And so I think we all have to be thinking hard about short-term wins from automation, but long-term gains from making sure we're bringing in the next generation of talent. And that's what we're trying to do at LPL is, look, we've got 1,000 frontline service professionals who are licensed and they take conversations all day long. They're learning this business. We're building a capability and a set of tools to help see if, hey, do you want to go down associate advisor path? And then we can actually start to bring them into people's offices. We've also got, an abandoned accounts desk, and those folks are dealing with investors all day long. Can we train them up, help them get their CFP? I think, like you said, Andy, the old days of, look, that's how I came into the business. I was part of a training class with Payne Weber back in the 90s, where they'd hire 150 of us. 6 months later, there's 50 of us left. 3 months later, there's 25. Payne Weber just takes all the assets along the way and hands them to their old brokers and makes them happy. And a handful of us make it. That's gone because it was really expensive to run. And I think we're going to have to do it slightly differently, either through organizations like us, upskilling folks, or through advisors' practices and bringing in the right talent and making sure we're taking the time to develop that talent to be that next generation.
So one final question, because we're right on about an hour here, and it'd be a mistake for me to not ask this question because I think a lot of financial advisors would love to know, because we have two unique individuals, and I'd like to hear both your views on it. How do you think this industry is going to change, you guys? I mean, we've seen a lot of consolidation. I mean, I remember there was a lot more broker-dealers out there, independent ones, than there are today. Of course, LPL is about 2/3 of them. But that being said, under both your guys' reign. But how do you see that evolving? And then, the RIA space, just, in the wirehouses. I heard from somebody on stage today about how new players are coming and maybe developing wealth management, possibly like Citigroup or Citibank, and just different players that are going to get into space. How do you guys see it evolving in the next 3, 5, 10 years?
Matt, you go ahead.
Yeah, I think the trend of consolidation is going to not only continue but accelerate, and you're seeing it on the bank side as well as you're on the wealth management side. And I wouldn't be surprised if there are 10 to 15 major players, period, across all of the walks. I think you're going to see even more consolidation in the RA marketplace, and you're already seeing it. You're seeing larger and larger national branded RIAs that I would argue are becoming wirehouses in many instances. They're going to fully conforming W-2 models. And so what was once this more kind of wildly independent RIA marketplace is likely to be 10 or 15 major RIA firms across the country. And I don't think you're going to see as many folks hanging a shingle and starting it all themselves because of what we talked about, the complexity and the scale complexities in front of us and the scale necessary to address it. So I think you're going to see more consolidation across every part of our industry. And you're going to see, I'm sure, some emerging players. There are going to be some very sophisticated folks like Robinhood and some of the others who are going to continue to evolve the direct-to-consumer model. And I think we're all going to have to think about how might that direct-to-consumer model potentially dislocate us. I think we've made it pretty clear that those folks who are bringing real value and comprehensive planning behind that value are unlikely to be dislocated. But folks who fall short of that mark may be dislocated. And so I think you're going to have kind of the big dogs on one side, a handful of wirehouse firms. On the RIA side, massive consolidation to national RIA firms, 1 or 2 independent broker dealers left. I'd give you my vote on who one of them will be. And a continuation of sophistication in the direct-to-consumer marketplace. And that is going to start to impede in parts of our world as well.
I'm laughing at Matt's description. I don't disagree with anything. It brought me back to a really long time ago. I think we used to call them FPA meetings. I think it's now One Voice with FSI, whatever it was. But it was all the broker dealer men and women we get in the room. We were at a reception with the CEO of a really large firm who was quite a character. And he leaned over to me, and he looked at the reception, he looked at me, smoking his cigarette with his whiskey. He said, "Look at these people, Andy, because they're all out of business. They just don't know it yet." And it is coming true, right? It's just really, really hard to run those businesses. So I completely agree with where Matt is. And it's the risk of having, he and I we got similar views and similar experiences, but I completely agree. A slightly expanded way to say it, I do think this is a great business. I do think there's lots of ways to help people. I think the bigger firms have great value in scale and economics, and they can build a lot more in-house. I think the smaller boutiques can still define great value. They can maneuver a little more quickly, and I think they can perform in the niches they want to and help advisors and or end clients the way they want to. And I think both can survive quite well. I think you just got to know what you want to be good at and drive a truck through it. And if you're clear on that, you can be wildly successful. But I agree, the economics are such that, yeah, you'll see the players who look like what Matt described, and I'm willing to bet on one player who I think will be the dominant survivor. And that's my view.
Very, very well articulated, you two. It's great to have you on, Matt. Thank you so much for your valuable time. Andy and I really appreciate it. And we also do appreciate the partnership with LPL tremendously. You guys have been a great partner for us. We wouldn't be here without your support. So thank you very much.
Yeah, Jimmy, Andy, thanks so much.
Yes, thanks, man. Thanks, Jimmy.
Come and dance on our floor.